All right, guys, let's get into chapter 14. We have a complete class that goes over this managerial accounting, so we're going to do a little bit of this just kind of as an introduction. So, what we've done this entire time in financial accounting in 241 and 242 is the financial side. This is going to be based on the managerial side. Um, the good thing about this is so far we've done everything that's been heavy gap based. And what we can do on this is basically for managers only. So this can be very heavy based on how we want to do this for our own use only. We don't have to rely as much on what we're going to do for presenting it to anybody outside of our company. There's a lot of flexibility, and we can look at information that we're going to use to manage our company. It's used for planning and trying to control what our costs are. We kind of can plan the future of our company. We can use this information to build new factories, develop new products, expand into new markets. If we have things that we know we have extra cash flow, control our costs, we can look and see if we have the right margins that we have. If are things too high, we need to discontinue operations in certain places. We talked about that before on our other financial statements about discontinuing operations. This goes over kind of this hierarchy before what we've talked about with financial accounting about who our users are, and most of our users are external in financial accounting. We're going to give this information outside of our company. That's why we want to make sure we're following GAAP. That way, all of our information for every company is following the same framework, and that way, these external users can rely on our information to be correct based on those rules. When it comes to managerial accounting, we're going to use whatever we need, whatever our managers want, whatever is useful for our company, because these are almost work papers, things that aren't going to leave our company, things that we're going to use that benefit us the most. It's going to be tailored to that company or that industry. So that way we can get the information we need to manage our business. Always talk about fraud to make sure that this is something that we're going to use maybe to develop these procedures and develop our financial statements for from the managerial side is to kind of weed out fraud and to uphold some of our policies. Make sure our accounting is correct on the financial side is done from some of our managerial policies. Talks about career paths. We always talked about in our accounting world, you either went into public practice or you went into industry. Industry means you're working for a company, you're a controller or some kind of financial analyst, like they talked about here. This kind of goes over some of the salaries and some of the pay scale. I think some of these are pretty close for Huntsville. Obviously, if you're working in New York, these are not accurate, but if you're working in Huntsville, it's pretty close, I think. The junior accountant, I believe, is a little low with a 4 year degree. Obviously, if you have your CPA certificate, I think that helps too. The CFO, I think that's kind of an average. I've had some that were well into the seven figures with bonuses and stuff, but it just depends upon who you're working for and what the detail of your what kind of industry it is and how much what your pay scale is. If you're doing your own, if you're your own boss, if you have your own business, it could be a lot higher than this. That's why I stress so much to all you guys in class about going through and not doing accounting or choosing it as a career path or as um, a major path is that you're at a huge competitive advantage when you're going through and doing this, even if you never actually use it as a in public practice. If you use it in industry, you're it's so much more at an advantage for other people. All right, so this is kind of the framework for managerial accounting. Um, and it again, it's pretty self-explanatory. I think this for most of you guys, I think we're going to be okay on this as to how we handle this. Anything that goes directly into our product, stuff that I have to have. They use bikes. I mean, we're manufacturing bicycles, but it can be the same for automobiles. It can be the same for houses, homes. Anything that goes directly into that product is a direct cost. So here they're talking about tires, seats, handlebars, cables, chains, any of the components that go actually into those manufactured goods is a direct cost. Indirect costs, we can't trace it directly to one product, but it's something that's necessary. So, you have to have an accountant at the factory. You have to have the administrator there. You have to have the rent for the factory. It's something that's a requirement for those people that are putting together those parts. It's something that has to happen. It's something that's a requirement, but they're not actually putting together the components. So it's a require the manager's salary, even a supervisor, janitorial. There is something that's indirect. Okay. All right, it can be cost effectively traced to the manufacturing process. So these are things that are direct products that go direct materials that go right into right into our product. Direct labor, those are people that are actually putting together those components. Those are things that I can trace, absolutely trace their work. They're on the assembly line putting together the components. All right. They don't do anything else. They're not the accountant. They're not the administrator. They're not the payroll clerk. They're not salespeople. They're not a site supervisor. They are actually putting together the components. So that says the example here is the wages paid to the bike assembly worker. So that's our direct labor. So you have to have both of those things will contribute to what our cost of goods manufactured is. Factory overhead consists of all the manufacturing costs that are not, or direct labor that cannot be you can effectively trace to our finished goods. So you've got indirect labors. These are things again that are requirements that are necessities for our workers to do their jobs, but they're not necessarily working on one product. They're not necessarily working on those products. So if you have a janitorial crew at your factory, if we have somebody that repairs your equipment, so that's a necessity. We have to have those people for our direct labor employees, excuse me, to do their jobs, but they're not actually putting together our products. All right. So prime cost versus conversion cost. So the prime cost is things that are primary to our business model. These are things that actually go into the actual product. All right. They're actually primary to the product that we have. So we have to have direct material and direct labor. That's what goes into the product. Factory overhead and some of our direct labor may be a conversion cost. All right. Selling expenses, general administrative, are things that are linked to a time period, not a product. So most of these things are done over time. It's not necessarily one product at a time. It's a bunch of products that they're selling. They're selling an entire job or a batch of jobs to a customer or to a retail outlet. All right, you can see this slide here about direct costs, indirect costs. These are things that are going right into it, and then period costs that are things that we have to have again, but there's stuff that's basically more tied to time. We can do this. I know we've been heavy talking about it for the last several chapters. We've been heavy talking about either a retailer or manufacturer, but service companies can do this too. Even in our world as accountants and lawyers are the same way too. We have overhead items. We have overhead employees that don't work on the client's files, don't work on tax returns, don't work on consulting jobs, but are things that we are employees we have to get our job done. So um, even in my organizations, we've had employees where we would finish the tax returns, print all the information out, and we would hand it over to them because they didn't want us at billing out at $200 an hour to assemble a tax return, to get the envelopes ready, get the postage ready, get all the information scanned in that we had from our clients. They didn't want us doing that at $200 an hour. They gave it to somebody else that was billing out at $50 an hour, and they were very good at that. They knew which envelopes to have ready. They knew which states had to be filed. They knew all that information. That is a very valuable service, but it was an administrative role, versus the person that actually knew the tax law. So they were working on the files on a peripheral standpoint. So we can kind of group that into overhead items as well. All right. So now for our balance sheet, what we're going to do with we've done this before. You guys have done this. This is not going to be anything new per se. We're just going to have some more detail on our inventory. So we're going to have raw materials, we're going to have work in process, and finished goods inventory. So raw materials is just simply material that I bought that I haven't touched yet. Work in process means I have it in some stages of completion, but it's not ready to be sold. And finished goods means I've done everything that I need to do for that product to leave my facility. All right. Um, in the building world, we would used to call the raw materials, we would call this our lot inventory. And then as I was doing different things, if I started it, I would move my lot inventory to work in process. As I started the foundation, the framing, the roofing, any kind of electrical, it would go into work in process until it was a finished home that was available for sale. Okay. So as you can see here, we had all of our inventory before. Now we just have it separated into three categories and the various stages of completion. When we just purchased our inventory, we had it in work in process inventory and finished goods. This detail here may never be shown to anybody else. It's very likely that it may not be shown to anybody else. All we're going to do now is show this for our own purposes to know that how much do I need to have in inventory? Do I need to buy more? Is it most of my inventory in work in process and finished goods? Or I need to buy more material because I can't continue my operations if I don't have any more raw material to continue manufacturing. Right. Nothing changes on that formula at all. All right. So the biggest thing they talk about is this. So there's your expanded formula about direct labor plus factory overhead. That's how we figure out our rates as we go through this to figure out how much time we're going to have. Um, okay. Well, let's pause there for now and I'll start this on another video.